Yeah. Okay. We are back. Let me post the link here to the people in Twitter. Up. Um, uh, so. Voilà. Voilà, we can start. Thank you all for joining. It's a long time ago, a month, maybe 2 months that I did a video, and that was actually on the first, I thought, bottom. I thought not bottom, but I thought like the serious correction. I started buying. I invested in ARK a lot. I said that like some companies are very cheap, like Netflix, Twitter, and that really I have value. Growth stocks are already severely punished. ARK was cut by two from $160 high to $80, but since then the market continued to crash, and ARK found a bottom at, or at least a low at $40. So it was cut again in half, and so the same happened with my stocks that I bought, growth stocks, because I didn't invest in growth before. I had oil tankers a long time, then I had airlines. I kept some oil tankers, but then I kicked out these oil tankers for good and cut back my airlines a lot 2 months ago for growth stocks. But since then, growth stocks continue to collapse, and actually oil tankers, I just hear from Flo, went up. So I totally missed that. And airlines, we did the same as the overall market, which is going down, but not as much as growth stocks. So I continue to pile up losses. I was also cut by two again, because also crypto continued to go down. I found new lows recently. Well, my biggest exposure was BCH. I found a new low around $200. It's been around $300, $400 for a long time, but now it's at 200. And DPI was around, also, how much was it? $150, $200, but also found a low at $80. So, and for me, I've been margin called a lot. Trying to avoid margin calls. And for that, I have had to sell, a lot of my BCH, about half, sadly, because I can't use it as collateral for my DeFi loan. I can only use Ethereum for that, or DPI itself. And so I had to convert BCH to Ethereum to use as collateral, because otherwise I would be my DeFi loan would be margin called, would be paid off with my collateral, and then I lost my DPI. So I didn't want that. But of course, my exposure crypto has been high already all the time, around 80% the past year, even 90% at the top. Was even higher. Maybe it was 90% plus. Was very high. It went to 80, 70%, been there all the time, because at the same time I've lost a lot in my brokerage account, as much as I lost in crypto. But my exposure is still the same today. I still have an 80%, 70, 80% exposure to crypto, but it's not like more than half BCH anymore. That used to be the case, like 50% or so, 60%. That's been down now to 30%. I still have a 30% BCH exposure, but that's about half of what I had before. And now I have also a DPI exposure of 30%, the same as before, but I also have like about 15% or so, or 20% Ethereum exposure. And so that, but the goal of the Ethereum now, it's used as collateral, but the goal is to convert it in new projects. So that's what I'm doing. I don't reduce my exposure of crypto, but I shift cryptos, shift BCH for Ethereum, and later the Ethereum will be invest in other projects, because I think that's the biggest mistake I've made. Usually during corrections, serious corrections, of course, big mistake is I didn't see this correction coming. The Corona crash, I predicted, I protected myself against it, but this one I really failed to protect me at all against it. I didn't see it coming, and so I continue to be bullish the whole way down, and of course it's very very costly because you keep on investing more, and yeah, the leverage also I made some quite big mistakes there, but let me quickly go over the comments that were done in the previous live show. Maybe on noise, I should also let them know that I started a new one here. Let me just quickly share that. But this is a very, very hard time for investors. Yeah, I mean, some people lost a lot more even with some, yeah, terribly gone wrong projects, such as Luna and the stablecoin UST. I'm sorry for your loss if you were part of that. That's of course very painful, especially if you have a large exposure. It's a very big difference between losing 90% and losing 100%. A very big one. But yeah, if you learn the lessons from it, that's the best you can do, most satisfactory, and the only way for me to feel good about myself after having such big losses is to learn valuable lessons, and that's what I do. And then I'm happy to share with you also what I learned and what I changed. But of course, the biggest danger right now is to not do the right thing. Like, okay, most people will conclude, damn, I took too much risk. Damn, I was too much exposed. I should have taken profits or locked in profits before. That's, of course, the general lesson we all learn. But the question is, what do you do today? If you're going to today take risk off the table, and reduce exposures today after you lost a lot, that's the wrong move. The right move is to like learn the lessons but implement them later. Now is the time to take lots of risk, to have high exposures, because now we had a serious severe correction. If you measure it by different kind of metrics, you can only conclude that yes, we have gotten a very very big correction. It can always get worse, but I certainly in the long term very likely a good time to be exposed to certain investments, or in general to the market. So that's the first thing that I do. I have a leverager currently. Like before, I was not investing with leverage, and at the points of this, I would be all in. I would be 100% invested, no cash. So that's what I did 2 years ago during Corona crash, or 2 years before that during the after the crypto crash in 2018. And in 2020, I would go like heavy crypto, 80% exposure, so, and then 20% some other things, but no cash. Like that's the right thing to do right now. But in case of leverage, which I've started to do, it's a lot more complex, but it's challenging, and I find it very interesting and worthwhile. I don't believe in these and I don't agree with these kind of black-white statements where leverage is bad and don't use leverage. Like, no, I don't agree with that. Or loans are bad. Don't lend money to invest. Like, I don't agree with that. Simply because it's a simple calculation. If you can borrow at 2% and you can have an average return of 20%, wow, that's 18% profit. Like that makes sense. But of course, there are dangerous instruments. You have to know how to really deal with it. It's much harder. I have to learn that, and that's a process where I'm going through, and I made some really big mistakes, and it's costed me a lot. And that's just, but that's always how it goes when you learn a trade. I think so. I've shared it. Thank you for confirming, Send Crypto, that sound and camera are good. Let me first then go through the comments that were brought up before. my Kelly analysis was wrong. I don't agree with that. Like I was very aware. For example, I invested 40% in crypto at the Corona bottom, in March 2020, because that was the Kelly criterion calculation. And in that, I am highly convinced that's the right way to invest. You need to calculate scientifically how much you need to allocate based on risk reward, and it's a formula that I from time to time share, and I use that for my investments. But the mistake I made was that after the Corona crash, at 40% allocation, I was correct, calculated. Okay, you can make some mistakes there, of course, but overall, like the Kelly criterion, the idea is also that you don't do full Kelly, you do half Kelly to take into account mistakes you made, judgment mistakes. Of course, we all get greedy, we all get fearful, and that also goes into the formula. But then still, that was well done and well calculated. What happens after that is the market goes up a lot. My exposure goes from 40% to 90% crypto. And then what did I do? And you can see it all in my videos from the past and my tweets from the past. I say, no, I am not selling crypto because the bull market is not finished. All these metrics that you have to judge whether we reached a top, a temporary top, a multi-year top in crypto, they have not been triggered, as Colin calls crypto with the CBBI shows so clearly. The odds for crypto to have reached the top 1 year ago was low. That's why I said, no, I'm not selling any crypto, even though I'm at 90% exposure. And that was a mistake I now realize. I'm not a hodler forever. No, I made a mistake 2 years before that in 2017 at the peak. I was also at 90% exposure of crypto, but I said, no, I'm not selling because I'm going to hold these coins for the rest of my life through the multi bull and bear cycles. I will just hold them the way Roger Ver does that. It seems to be he's not trading in and out, and that's what I'm gonna do. Like after losing 80% in 2018, I realized no, this is not a strategy for me. Losing 80% is too painful. Next time, I will not do a hodl strategy. I will try to time the top and build my exposure down to very low or even zero or even go short. That was what I've been predicting the past 2 years that I was planning to do. But why I didn't sell anything a year ago was because I believed it was very likely we didn't reach the top. So now I realize the mistake I've made there. The mistake I've made there is that, first of all, not very likely means there is still a small chance I should have sold a little bit, even if I follow this reasoning. Selling nothing at all is not in line with the probability calculation. Okay, but that's a small mistake. I would have only sold and maybe a little bit, 10% or so, which would have made a big difference, of course. But okay, I didn't. But I made a much bigger mistake, and I believe that my strategy will be improved a lot when I implement this. The bigger mistake I made was that I didn't follow the Kelly criterion. It's not logically correct to say that, okay, if you want to do 100x multiplier, you need to allocate according to the Kelly, but then you need to let it go and not sell anything, because otherwise you never reach your 100x. That was my logic. But that will always lead to a very concentrated position. Let's say you bet on 10 investments. One of them does 100x. What happens is it becomes 90% plus of your portfolio. If you say, I'm not selling anything because I want to otherwise, even if it does only a 10x, you're already at 90% exposure. But you believe it's going to do 100x. You're not going to reach that 100x if you start selling. So my logic was you need to hold it, even if it's a high exposure in your portfolio. And that's wrong. And why is it wrong? Because you're not sure it's going to go to 100x. It may be 10x and that's it. So there's a small probability that that's not going to happen. So selling a small piece makes total sense. That's the first thing. But it's more than that, I believe. The problem is that if you do your Kelly calculation again, after it 10x'd, then your calculation will say that, okay, I mean, in the past there was such a good investment, and it was justified to have a 40% allocation. But now that at 10x, you cannot say that anymore. Huh? The potential has gone down with a 10x. Huh? Like it will go up 10 times less now because it already went up 10 times. Huh? So the potential is less, and the chance that it will like correct seriously from here before it goes up further has gone up a lot. Huh? So the Kelly calculation will very likely say that your allocation should be lower than the 40% today. After 10x, it should be maybe 20%, but you're at 90%. Huh? And that's the big mistake I made. Huh? I didn't do my Kelly calculation again because I said no, because it's not over. The bull market is likely not over. Huh? But it's not the right way to invest. Huh? The right way to invest is to redo that Kelly calculation, huh? And okay, maybe not go to 20% allocation, huh? But to cut it in half, for example, from 90 to 45. Huh? Like that makes lots of sense. Huh? And even if it goes another 10x after that, huh? Okay, you sold half, but you still have half left, huh, to do another 10x. Huh? But the chances actually are much higher that you're gonna get first a serious correction. Huh? And so that was really the right move. So I think that's the biggest lesson that I've learned, that I should really, when the getting is good, redo my Kelly calculation. When I'm feeling I'm a genius, when I have made lots of money, I should redo the Kelly calculation and allocate accordingly. And if I start to do that, I will have a much better performance during bull markets. So that's my most valuable lesson I've learned. But that applies also today. Today is a serious correction. Many people say bear market. I don't agree with that. It's just a serious correction. In stocks as well as in crypto, there is no bear market. It's how did you define bear markets? But I define it as something where you make losses over a 5 to 10 year period. That's a real bear market when it goes to stocks. When it comes to crypto, it's like where you make like well, in crypto, actually, we went to 2.5 trillion and we were cut in half to 1.2 trillion. That's not a bear market in crypto. A bear market crypto is where you do 90% you shop off of the total market cap, not 50%. I succeeded in losing 90% because also my coin selections have been really bad. That's another big mistake I've made. I bet most of it on Bitcoin Cash, and price-wise, it has totally not delivered versus some other coins. Even BTC has done considerably better, but Ethereum especially has strongly outperformed BCH, and many others have, like even total Ponzi's, probably Ponzi's. I'm not sure of that, but like that's my impression. For example, of a project like Hex has like thousand-folded investors' his money. Many people have made lots of money in crypto the past 2 years, but not me, because I invested mainly in a project that really has not delivered and lost lots of ranking, and so I failed in my coin selection. So yeah, that also plays. And what's my plan there when it comes to Bitcoin Cash? Still have a 30% exposure. I'm not really convinced it's a loser. Quality can go down, can be misjudged and neglected for a long time, as we've seen with Bitcoin during the two strong corrections of 2014-15, as well as during 2017-18, and Ethereum even then too. Many people very negative about these projects. The strongest believers became negative even, but it was still fundamentally good project that went up a lot later. And I think the same is certainly possible still with Bitcoin Cash, but adoption has not been impressive. If you look at the amount of transactions on chain, it's okay, but it's not really out competing others. Like for example, Monero is doing slightly better. And then we have also the amount of US dollars sent over the network. There too, somebody has been playing with the numbers because it used to be very high for Bitcoin Cash, but it didn't make much sense because it was as high as for BTC, but now it has dropped a lot. So somebody has been manipulating those numbers, and now that has become clear. And of course, with noise with Cash, the amount of transactions was also like artificially pumped, and that's been corrected also now. But now that the numbers seems to be quite representative, I believe, it's not so impressive. The Bitcoin Cash has a real problem with adoption. I do use the coin a lot for payments, but we have not seen really, like, not many people adopt it. It's really a challenge still for Bitcoin Cash, and so it has really also made some efforts. I really like the strong foundations of Bitcoin Cash. It's a voluntary, decentralized project, but yeah, you need to have results. In the end, it's about adoption and price performance. And if it's not there, like you cannot believe as strong and allocate it as strong if, like, after 5 years now, the results are disappointing. Then yeah, you need to cut back in your exposure, and that's what I'm doing. And also, yeah, I just have learned it's strange how that goes, and but often the projects that I invest in that I don't really hold a strong love for or conviction for end up making me the most money. And I think it's time to do that also for the crypto market, diversify a little bit. That makes sense to me. And from my total 70-80% exposure, diversified 20% or so into other coins, I think is a good move. And I really do hope that Bitcoin Cash succeeds, and I'm still rooting for it, but I cannot invest as much in it as before. And also, so yeah, I think a lot has become clear, of course. Actually, originally I predicted lengthening cycles during the previous bear market, and I have proven to be right here. The cycle indeed becomes longer and longer. There is no 4-year cycle based on the halving of the inflation rate of BTC. That's now become clear, and I've always said that. I believe that I've believed, like, the problem is with myself also, like, I've been putting it on the wrong. I became too bullish and too greedy a year, 2 years ago, as the market started to accelerate faster than I had anticipated. I also started to predict tops earlier, and that didn't happen. It was just a temporary pump, and it correct again strongly. And so yeah. But I can fall back on my previous analysis I've done for a long time, that I predicted in 2017, 2018 during the previous bear market that the peak would be only in 2023. I still have the sheets that I will continue to work on if I find the time. But it seems that we're in such indeed in such a cycle. And yeah, so let me see what else was said here. Yeah, so I think about the current market, there are now indicators that we have most likely reached a temporary bottom here, because of the volume that was set. I've shared it on my Twitter from some other people. So I believe that we have reached finally a temporary bottom, and I'm saying temporary because, of course, I hope, and I personally think, actually, no, this is the bottom. as well as for stocks, as for crypto, and I'm also investing as such. I have now a leverage of 1.8. That's because I've tried to hold on to my positions, but because my capital has shrunk so much, actually I'm quite leveraged. But I believe that's the right approach right now. I also shared my portfolio on Twitter. I'm now 80% in crypto. I'm 60% in stocks. So we're already at 140% allocation here in total. And then I offer also another 20% or 30% short exposure to commodities and cash. So I have a total exposure of 180%. So I'm invested almost double as much as the capital that I have. Of course, if markets continue to go down, it's going to become more costly for me, and I will lose more. And there is a risk here for sure that I'm taking. But yeah, it's the right move, I believe, because there are no buyers today. Who's buying? The few people that are buying say, or do it with a little bit. Everybody is selling, and that's me included. Like, I'm not buying. I have to sell here and there just to keep my positions. And that's a pity. Like that's because I've made mistakes. I was too invested, over leveraged. That's why now I can't be that buyer. But I should also not jump on the sale wagon and start selling and cut down my leverage today to zero. That would not be wise. I have to wait for at least a rebound to be doing such a thing. But that would only be if I believe that fundamentally my strategy is wrong of using leverage. And there I don't think that to be the case. But it is important to cut back on exposures as to not wipe myself out. So as if I continue to be wrong, yes, I do cut back. I've had to do that, for example, with my short on commodities. I decided to do a minus 20% short on commodities, but because my other investments went down so much, and my short on commodities didn't pan out, it went to minus 30%, minus 40, even minus 50 at one point. That was crazy. I should never let that go so high, and cut back faster, especially a short position, because a short position can really wipe you out. So I should cut that back and keep that under control, the amount of leverage that I take. But I'm doing that. I believe that the current exposures that I'm taking are justified. For example, the exposure advised by Kelly right now for crypto is 50%. That's what my calculation is saying. But I have 80. Shouldn't I cut back to 50 now? Yes, I should if I follow the Kelly criterion. But yeah, it's too late. It's too late. I have to wait for a rebound before I do that. Yep. And for example, for commodities, it was minus 20%. It went, I think, to minus 30%. I cut it back to minus 20%. But now I'm back at minus 30%. Should I cut it back to minus 20%? Yes, probably I will, the moment it really continues to go up. But I'm waiting it a bit longer because we are at a turning point, I believe. And I believe commodities are very likely to go down now. Like I believe that inflation trade is really overplayed here. And I believe that's really backed with strong fundamentals. For example, the commodity shortage is created by started really with the housing boom in America. Lots of building, but that cannot last. Like that stops totally now with interest rates going up so much. No, like there will be no need for commodities there. We also have it's because of the supply disruption, all these COVID sanctions and red tape everywhere caused lots of materials not to get to the right place, causing shortages. Well, that too is past now. The COVID crisis is over, except in China. But for the rest of the world, that's over. Borders are all opening, and trade can continue, and that will make these supply shortages go away, which will have also likely a negative effect on commodity prices. Because commodity production can also really ramp up now, and is ramping up strongly, of course, due to these high prices. So I really believe that it's likely to go down. So that's why I allow myself to go over a certain exposure that I should keep in line. So that's how it goes for me with my investments. Revenge trading, I don't believe this is revenge trading that I'm doing. No. But for most people, my advice is the same as 2 months ago. And of course, if you followed it 2 months ago, you're sitting on losses. So yeah, I could be wrong, but yeah, you should not have any cash. Most people don't use leverage, or don't use loans. That's okay. You just invest with your own capital, but you should be fully invested now in the markets, fully. And have no cash. And she should certainly not be invested in commodities. They are way too expensive. If anything, you should be short commodities, selling commodities. Crypto is very good. You should not be invested in energy, but there I've been totally wrong also. My energy investments, I've sold too soon the tanker trade. I've considered actually also coal stocks from a friend a year, 2 years ago. I said no, because I don't believe energy will go up. Or inflation. I did not believe inflation would go up. I've also said, like, yeah, they print lots of money, but this will not cause a rise of inflation. So these were wrong predictions of mine, and I'm paying the price today. I don't make any money with energy or commodities going up. But to now jump on that bandwagon and invest in energy stocks or commodities, or really the wrong trade. I'm strongly convinced of that. So I would not do that. Also, like, going to what I see also in crypto is people getting disgusted again by altcoins and smaller cryptocurrencies, but also strongly disagree with that. BTC still very poor fundamentals. I don't I believe the same as I believed years ago, but it hasn't panned out, and I haven't made money on that. To the contrary, but nothing's changed. You do have to look at the fundamentals, at adoption, at coin metrics, and there I don't see any change for BTC. Poor fundamentals, poorly managed, but Ethereum, say, well managed, but all priced in, really. No opportunity, I believe. But I also don't know where the opportunity lays. I have not studied crypto markets well enough, but I believe there's plenty elsewhere. I think Monero is also an interesting project, because there too I noticed that people don't really appreciate it for what it has achieved. It's a project that has achieved to be a market leader in privacy, payments, and there's lots of fear around the regulations there, and I believe that's also priced in that Monero is relatively cheap, because people don't are afraid that government will clamp down on it. But the USP of cryptocurrency in the end is, well, there are two major unique selling propositions. One is protect against inflation. Government cannot print more of it, but then you have, of course, the problem with, okay, you're protecting inflation, but now it's like basically in a company you're investing, and if it's a successful company, you make lots of money. If it's a bad company, you lose lots of money. So that's the trick now, and serious cycles, booms and busts. So you have other problems to deal with now. You have to select the right currency. But okay, that's one of the USPs. But another one is really like For what do you need cryptocurrency? For what do you really need it that you can't do with fiat currency? And the only thing I really can think of, two things I can think of is you want to make private payments online. Offline you can use cash bills, but offline online you cannot use cash bills. What you're gonna use? You cannot use credit cards or bank transfers. You can only use crypto. And which crypto will you use then? Which is the best privacy currency? Huh? It's Monero. Huh? So, I mean, that's a strong story. Huh? Um, it's not as user friendly as, for example, Bitcoin Cash. Huh? Um, and it has more legal risks. Yes, but it is the best privacy solution, and that will be in demand in the future, because privacy solution means for payments, but also for storage. And there is, of course, another USP for crypto, and that is, like, for example, decentralized finance, DeFi. And there I am invested in DPI protocol, but yeah, of course, and Ethereum has a very strong story there, offering most of DeFi. But yeah, it's really overloaded. The Ethereum network is it decentralized? I would say less than, for example, Bitcoin Cash, because it's more dependent on a few people. Ethereum, it has a Vitalik Buterin, really a very central figure that has made it, but can also break it. But especially, it's just all priced in. Like, I really don't see opportunity there. But I've been wrong a lot about that. What else? I think I'm going to start going through the comments here of the new chat. Hi all. Hi Ryan Giffen. Lots of comments. That's really great. Thank you all for joining. 73 people. I see lots of warnings in the chat about leverage. Don't do that. It's gonna the bottom is not in. It's gonna crash more. I see that. No, I did not invest in NFTs, and I made a video also on that. I do think it's a new segment, and there is value there, and maybe interesting right now to look for it there. But I'm not doing it myself. I have to admit. If there could be some kind of index that I can invest in for NFT projects, I would be interested, but I have not found such a thing. And of course, it's difficult. It needs to be a managed index and somebody who selects critically, and yeah. Hi, Landvier, confirming my lessons learned. Thank you so much. That you have to indeed re-evaluate the Cali criterion. Very true. Landvier was also the one recommending, I think, the oil tanker. Congrats that the trade works out. I didn't check the price of oil tankers, but Flo said so. He also recommended it at the time. Yeah, that's a bit the problem. Yeah, I bailed on that investment too soon, but yeah, I didn't see it anymore, and then I was wrong also, I think. Yeah. Yeah, in investing, if you have 60% right and 40% wrong, you're doing good, huh? And if you allocate wisely, so when I look at my personal returns, they have gone down so much. At the peak 1 year ago, I had a 50% compound annual growth rate in the past 10 years. Very, very well done. But that's been cut in half almost to 28% now. After losing 90%, yeah, it's a lot less, but it's still respectable. I'm still okay, but yeah, I really got a lesson in modesty and being humble. Yeah, that's the good thing about losing a lot, is that yeah, it if you deal with it right, it humbles you, and you learn valuable lessons. Consumer says that BCH is a good investment. Elon Musk will support it in under 1 year. Note my words. Let's hope so. It would be great. Yeah, let's hit the like button, guys. Looking at the comments. Okay, that's good. That's good. Hey, Sun Crypto is posting a $10 comment. And he says that the Trello trend line analysis is the best. He still believes, and that we're currently the trend line, according to his calculations, at 2.3 trillion as of today. 2 but yeah, I have a different calculation, but what he says is that we hit 50% undervaluation, similar to the 2018 bottom. That's according to his calculations. According to my calculation, we're at fair value right now. The trend line is at 1.2, 1.3 trillion, and we're also at that market cap. And this has happened before, during previous bull markets, that even once we go over in overvaluation, we stay there, but we still test the fair valuation trend line to bounce off of it and go into more higher overvaluation. I believe that's where we are also, and I believe, yeah, the Trollo trend line analysis shows that it's likely that we're gonna go up from here soon. But in any case, according to that analysis, we're at fair value right now, not at overvalue and not at undervalue. Is it wise to invest in crypto when it's at fair value for 80% of your portfolio, as I do? I would say no, except if you are. No, I would say no, because the only time to be invested so big in something is not when it's at fair value, but when it's at serious undervaluation, and the fundamental metrics are very positive. Adoption is clearly there, company is clearly growing, as was the case also with Tesla in 2019 when invested in it. Like, yes, you are valuation, and indeed the metrics are fantastic. Then you can go to an 80% exposure, but not when something is at just fair value. That's not a steal. That's not a buy. It's an okay buy. You buy a high quality company at a fair valuation. Warren Buffett says that's a good investment. And that's what he did with Apple a couple of years ago. And that has turned out very well for him. I would say the same applies here, but that means it's not an 80% allocation. If you do the Kelly calculation, I have a 50% allocation is fair today for crypto. But in my case, I'm working with leverage. I'm not with 100% invested. I'm with 170% invested. And then the question is, okay, how much do you invest then in crypto? If you're playing with 170%, okay, then actually 80% is the same as 50% from 100%. So I'm actually only half of my investments are in crypto, even though I have an 80% allocation. And so that's why I think it's fair, it's okay. And now is the time to take a risk. Now that markets have gone down a lot, lots of fear, lots of negative predictions as things will get a lot worse. That's what you need to take lots of risk. Now is, if you're going to take leverage, is now, not when markets recover. If you're going to be fully invested, is now, not when markets recover. Because what most people do is like, oh yeah, they are invested, but they have not invested much more, just a dipped a little bit here and there. If they're good investors, they still have a decent cash position left, or a big amount of capital invested in very safe investments that won't do much for them in the future, such as real estate or bonds or stock market indexes. And there I say, no, now is the time to really take a risk in the crypto market and in the stock market, in the growth sector. And so be fully allocated. And then in the future, if you really like a real estate as a security, or some stock indexes, or some cash or bonds, okay, then you can buy that in the future by selling crypto and stocks that you have today are fully loaded on. That's the right strategy, I believe. What can I say about Luna and Terra USDT, USDT? I have not studied these projects. I wasn't aware of them really. But I understood that this is a stable coin that is algorithmic supported or something. I've never studied it, but there are people say that that's not working, and it collapses sooner or later. And there were even bets around that between people, and it has happened multiple times, and indeed they collapse. So yeah, I think it's probably a failed project, and it won't recover. Why the fuck would you short commodities? Is just in tea. Look at my other videos. Yeah. The shortages and supply disruptions are all deliberate, says Justice for Germans. We won't be going back to a normal anytime soon. First it was COVID, now it's war. Putin is just another WEF stooge. Well, yeah, I do believe that indeed. I also find that there's so much to worry about, and I found the COVID crisis very scary, and very like to just be surrounded by people all wearing masks, and not being able to go there, and even to restaurants and hotels without being vaccinated, without showing a pass. I found it really like I couldn't believe what I was seeing, and a world really like very scary. So I'm very relieved that this has been dropped in most places, and that things are getting back to normal. And I could not have predicted that people would respond so extreme to this. So yeah, and but okay, it just took longer than I expected. But in the end, luckily, people have come to their senses, and are dropping these extreme, unjustifiable measures that are not based on science, but based on propaganda and fear mongering. And I really find it a very, yeah, concerning also the war in Ukraine, because it's, yeah, much closer to my door, Europe, and I also see the same kind of responses Also in the West, there's lots of propaganda, lots of fear mongering, and lots of like very dangerous policies that are really can be very damaging for the group. So this I find also all very concerning. Um, and I certainly did not predict this to happen. Um, I'm very happy to see or relieved for now that this war is not expanding, but it is a risk, and that it expands and that it turns out to be a lot worse, becomes even worse. But should you invest as such? That all is based on probabilities. How probable is it that it becomes worse, this war, and becomes a world war? We should ask, who can you ask? Who can give you a fair probability calculation? If somebody could do it in the chat, maybe. But you have to go with your personal judgment always, and it better be an informed judgment. And so, what's my opinion? I think that chances are low that it will become bigger. It's there, but it's not a high chance. And why? Because it's not happening. Like it's in the beginning usually that things. Of course, actually, I'm not an expert. I should not give any opinion on this. I don't know. I don't know. But I'm not investing based on that. I'm not giving that a high probability. For me, I will even like I'm investing for the future. I'm investing in airlines, 15%. I believe airlines are doing well now. Travel is really picking up again. I'm investing in growth stocks. I believe innovation will continue to be very important. So for me, that's just ARK Invest funds. I believe that's very well managed funds. I invest in crypto because okay, it has gone down already a lot, so it's really not a point to get out. But also the fundamentals continue to strengthen, as you see during COVID, as well as during war times. The financial system is abused to shut down people, and me myself have also suffered badly from the banking system being abused by government to steal money from people, to block people out of the financial system. And they do it with whole groups of people in Canada, for example. If you just make a donation to someone that the government doesn't like, they freeze your bank accounts. Or now with Russia, if you just have the wrong passport, you lose your bank accounts, and all kind of services, and you can't even transact as a country in the financial system. Like these people start to realize that cryptocurrency has a value. It has value because over time they go up in value instead of down, like with fiat currencies. But they also give privacy. They also give an alternative financial system in case that the traditional financial system is failing you as a person or as a group. So these are, I believe, good investments, and can also be good investments even if the war becomes bigger, because if you look at, for example, what's the stock market performance during war times, usually it's in the beginning that it gets punished, but it quite quickly finds a bottom and it starts to go up again long before the war is finished. So I believe that I probably also has played out already. Do I believe Tesla stock is a good buy at 700? Tesla is already the biggest company in the world, worth 1 or 2 trillion. If I'm not mistaken, Elon Musk is already the richest man in the world, worth 300 billion. No, there is no opportunity there, is my opinion. Huh? And I am realizing like many very intelligent people disagree and believe that this actually will become even a lot bigger than that. And that's possible, I believe, but it's not really probable. Maybe it's a 50-50 bet. There are many things that can go wrong there also. Elon Musk is taking on lots of risk, continues to do so, and it can also all turn into a disaster also. Like, I admire him very much, and but I would never dare to take the risks that he dares to take. Buying Twitter, for example, yeah, it's dangerous. So yeah. Mm, um, let's take a look at the comments. Yeah. Landfear says that he disagrees with my opinion on commodities. And that there is a great number of commodities where demand is higher than the supply, and it will remain so, such as oil and gas, and metals. Well, the 80s and 90s was a commodity bear market, but at the end of the 80s, you had actually 5 years of rising commodity prices. But it was basically a rebound during a bear market. I believe that's where we are also. And I've said that there's a possibility, of course, after also 10-year bear market in commodities starting in 2011, you could say, or 2008, somewhere there, we reached the top of commodities, actually 2010, let's say. So we had 10-year bear market. We can have a 5-year rebound. That just started the past year, 2 years. That's possible. But I think that this would not have happened if COVID was not happened. Like, I believe COVID has caused commodity price to go up. Artificial supply disruptions, and not a shortage of commodities, but an over demand of commodities due to crazy sanctions. Like, people, you make it impossible for people to live in the city. You forbid them to walk in the streets or to go to their work. They're gonna like run away from the cities and gonna want to live in the countryside. But normally in the countryside, there's not much to see there, and you want to go to the city to make money. And so, you do things like that. You want to have an artificial boom in demand for countryside homes. That's what happened, and that's what I believe caused most of the commodity shortages. And of course, just shutting down operations are going to create shortages, and also not allowing. There was just no. For example, the lumber shortage was because of a high demand of lumber, but also because they just have to shut down lumber mills, and when they reopen, they can't find the people that work to do the work. But that's because of government regulations. They pay everybody to stay at home. That's difficult to find workers then. But that's all temporary. Like, that's all now going away. And so, of course, the war can also cause shortages, certain commodities, but the market quickly finds way around sanctions, because there's money to be made. So you can't really count on these things and invest and bet on these. I really do not believe that there is a shortage of commodities. I have never seen, also not from you, Lanfear, a chart that shows that the supply of a certain commodity has gone down for a couple of years because the price was too low. That's what you really need to see. At the end of a bear market in commodities, that takes 10 years minimum, usually 20 years, you will see that the price has become so cheap that the production has collapsed. And also that you have a serious consolidation in the industry where only the biggest players survive and all the small operations are out. That's the end of a bear market. And there is no commodity, to my knowledge, that has seen anything like that. And so that's why I'm very skeptical of this. My Woos says that he only lost 15%. Congratulations. But people don't share it much, but what you should share is compound annual growth rate. That's what counts. Huh? How much percent you make on average over the years? Since when? You do that for 2 years? Okay, that's a start. But you need to have like 5 years, 10 years. You need to start building a record. You need to start measuring. Okay, how much did I start with? And what's been my return? It's a difficult calculation because you cannot count money that you add to your portfolio from other incomes, such as your business or your job. That's not a return. So you need to deduct that from your return. That's not a return that you made with investing. And inversely, money that you take out is not a loss. So you need to take that into account. It's a complicated calculation. But if you do that, you're going to get a real idea of, okay, what's my talent as an investor? What's my real return? You also have to deduct 5% inflation per year. But what is my real return over the years? Compound annual growth rate per year. That's very important. People don't share that, but you should know that. Because if your compound annual growth rate is, let's say, 20, 30%, that's very good. But if it's nothing, as with most people, it's not good. You need to change. Like if it's 5 to 10%, it's not good on average. Yeah, because you deduct the inflation of 5%, or how much is left? It's like a few percent per year, maybe. Like, is it worth your time even? You're not gonna get considerably better. Like you're not making money. And if you're losing money, it's even worse. So this is really the ultimate stick to measure against and to learn lessons from. It's easy to not lose money during a crash if you don't invest, I mean, but you're not going to be a successful investor. So what do you estimate the new crypto market top to be? Asks Tattoo School. Still the same, from the Trollo calculations, around 7-8 trillion in 2023, maybe 10 trillion. That I estimate to be the top. Kipkush Moses says, like, so you just put money in NFTs and expect to make money without doing nothing? Well, investing is you take a risk. You risk your money, and if you invest in something that will be higher in demand later than it is today, you're gonna make money, and you help the market, because the market, you buy something that the market doesn't want. So you satisfy market demand by buying. That's what you can do today, huh? Like, what's needed in the market? For what do you get paid? You get paid today for buying what people don't want, and thereby going through the very difficult feelings and uncomfortable feelings to take on a lot of risk, huh? Nobody likes to do that, but if you do it, you help other people, because they really want to get rid of these assets, and if they don't find a buyer, they get zero, huh? So you should be that buyer, huh? And offer them something for it, so that they can get out of the trade, and and that's your job, and you get paid to do the inverse. When everyone make a ton of money, then nobody wants to sell and everyone wants to buy, and that's where you need to sell, and that's where you need to satisfy market demand, and say like, yeah, I know I can make tons more if I just keep it a few days longer, but I'm not going to do that, because there is clearly already a very high demand here, and I should satisfy that demand. That's one way to look at it, huh? And so the same applies to NFTs, to any investment. Of course, the question is there fundamental value, in NFTs? And I believe yes. The way I understand it is that non-fungible tokens are like fungible tokens. They are just non-fungible. So fungible tokens are cryptocurrencies, huh? And a good cryptocurrency is fungible, but one cryptocurrency is more fungible than another. If a cryptocurrency has a history attached to each coin, then sometimes coins are not so fungible, because people don't want this coin with this history. That's the problem of BTC or Ethereum, huh? And also Bitcoin Cash. A blockchain is great for transparency, but it also don't give privacy, huh? And so for example, if you did certain transactions in the past that people don't like, yeah, they can find that out studying your blockchain analysis, and you may get problems from it, or they may not want to give money, they may not want to have your coins. So that's why a coin like, for example, Monero, where standard all transactions are mixed, gives high fungibility, because there is no history to the coin, and therefore all coins are equally valuable. Non-fungible tokens, NFTs, are every token is unique, is different, huh? And there can be value there, huh? Some tokens can be very unique and very valuable because of it's, for example, a unique piece of art, digital art, huh? That comes with also property rights, and it becomes in high demand later. That's possible, huh? But of course, many will be not valuable later and are crap, huh? So that's the job of an investor, to study that and to make a judgment on that, and to pay money for what's worth it. Cryptocurrency market. Hey, that's really great to see you. Taizan is here, our crypto legend. He says, all we can do is learn and avoid repeating the same mistakes in the next bull market. That's correct. Great to see you, Tai. I hope you're well. Great respect, says Plogman, for your transparency and admitting your losses, and that you're not paralyzed by it. As you say, learn from the losses, be smart, and it can all be earned back plus more over time. Please keep sharing. I will. Thank you, Plogman, and thank you all for joining. And I really love also that I have people following my work and interested in it and asking questions. It helps me a lot also. De Ziege says, you used to be a BCH support, but now Rethought Cash is abandoned by the developer and I have not heard from you in months. Is BCH out of favor? I invested big indeed in Rethought Cash and also in Noise.cash. The developer is still active there, actually, but of course, it's with periods, huh? And But indeed, yeah, I've expanded about BCH. Noise.cash and read.cash have not really yielded the results that I had hoped for. I think, yeah, read.cash is too small to really become some. I don't see it can become something big. And the idea is tipping for articles. And we've been doing that, but you don't really see a strong growth of that website, and that's discouraging. Then we had our hopes set on Noise, which is a Twitter platform, short post platform, and that also, yeah, is the same idea for short posts that you get that you tip. But yeah, we don't really see a great growth there. Um, I invested money in that, and there is some kind of like sponsorship where people get tips from the bots, but you see that many people try to play that, and there's lots of abuse and exploitation, and yeah, it looks like paying for content is not really getting the desired success of having a organically grown website where more and people start using it, start tipping each other. It doesn't really seem to happen. So yeah, it's with entrepreneurship and investing, you have to try many things to find something that really sticks and is success. You have to often learn a lot before you find the right thing. I don't think we're there yet for Bitcoin Cash. And I hope that people continue to try to make Bitcoin Cash a success. And I'm also still invested. But indeed, I've taken a big step back in my engagement in the project and focused on other investments as to make sure that I'm a successful investor, because that's my primary goal, not to make Bitcoin Cash a success, but to be a successful investor. And so I invest a lot in different investments, not just Bitcoin Cash. I invest a lot in, well, the stock market. In the past 2 years, I learned a lot about also options, shorting commodities, invest in tankers, energy, airlines, growth stocks. Like I'm busy with all these things, and also and in crypto. I would like to put more energy into actually studying different projects. That's my interest for the future. So I think BCH actually we have to be careful because I believe, like, yeah, I cut my exposure in half, but likely I will feel pain because there's pain in losing money, and there's even more pain in selling off and then later seeing it go up a lot. And I think actually that's quite a big risk here for Bitcoin Cash. What's really in need still, so I'm still bullish on Bitcoin Cash. It's just my personal engagement has gone down a lot, but I'm still invested a lot, and I will likely, yeah, I will see what I do in the future. But I still believe that Bitcoin Cash is great fundamentals. It's a tier one project, truly decentralized cryptocurrency that's managed well, and that you can build things on top of, and that has also been happening. But yeah, right now it's out of favor by the market, and I really hope that that turns around. But it's not. That's not in my hands. And I've certainly like tried to make it happen. I've also put in lots of energy, and as so many people have done, and we'll see how the future goes. So here, that's an interesting comment uh, um, um, by he says, I'm staying 50% safe. I'm not gonna risk working again. But that's interesting that you say that, because you can't escape working. What he means is a day job, a 9 to 5 job. But okay, that's of course very unpleasant to not, and of course you need to get out of that. But once you're an investor, your work is deploying money, investing money. And of course, if you can time crashes and you can get out before the crash and get in after, that's well done. Huh? But that is not something you can do today. Like, you can't say that the probability is high that we're going to crash more after we crashed already so hard. Huh? So I don't see how it is logically sound and rational to have 50% of your portfolio not invested in the market. I would say that you're not doing your work as an investor, and that actually can lead to you being unsuccessful as an investor. Huh? So yeah, you have to take calculated risk, and I don't think you did your calculation well here. Hi, Rich. Nice to see you. Uh, um, um, mm, um, mm. How is my daughter doing? Very good. My family is doing good. We have gone through a hard time, but we're doing better. They're telling people about the engagement of Roger Ver in Bitcoin Cash has gone down, and my sal has gone down, and that's accurate. But I think for Roger Ver also, like, he cannot just bet on one project, and he has also always said that he's invested in different projects. At times, he has been a strong supporter of Bitcoin Cash, and then he's been less active, but he's still supporting. He's building out now in the Caribbean there, onboarding many merchants, and it's an attractive place to go and to live and to spend Bitcoin Cash. Saint Kitts and Antigua and these islands. So it's a decentralized project. People come and go. Sometimes people invest a lot in it. Sometimes they take a step back. Other people take the forefront. That's how it goes. And it's all based on, yeah, personalities and yeah. He's running bitcoin.com, for example. It's a valuable website, important project, and so they had bet a lot on Bitcoin Cash. Now they've also involved other coins, and that makes financial sense. If you're running a website like that, you need to, like, make sure that you're a successful project and not depend on one currency. Huh? There, you can give something a big effort, but if it's not really picking up, you shouldn't be keep on pushing. Huh? You have to go with the empirical evidence also. Huh? You don't understand everything. Sometimes you don't know why something is not really uh, a success, huh? But it's not. Huh? Yeah, okay. You can take a step back, invest a little bit less, invest in some other things too. That's the wise thing to do. Do I think that Bitcoin Cash will go back to the top 10 or the top 5? It has dropped to the now 25th spot. I've long predicted that it was falling and falling, and when it was out of the top 10, I said no, that it has to go back. But it kept falling, and I've given up on on predicting and hoping that it will rise again. But that doesn't mean it won't happen. Um, so I'm not like betting on it as much anymore as in the past. Like my price predictions, I predicted $30,000 per coin per BCH for the next top, but that was based on assuming it will keep its market cap from the previous cycle. And now, like that was 10% at the peak. Now it's less than 1%. It has become unlikely that that's going to happen, simply because how much market share it has lost. Um, and so, yeah, I believe that empirical evidence has shown that what I predicted as probable a year, 2 years ago, well, it's not probable anymore. So I've changed my mind. It's not probable anymore that Bitcoin Cash will reach the same market share as in the previous cycle. Yeah, but it's still possible. But you have to invest on probabilities. However, it doesn't need to achieve the same market share to be a great investment. It's at $200 now. 2,000 is 10x. 20,000 is 100x. Okay, the 20,000 I don't think is probable anymore, but 2,000, yes. 5,000, yes. And then it's also a great investment. Um, Looking at the comments, but we're 1 hour and a half in. Justice for German says that he believes this is the start of a 1929 event, and which was the Great Depression. Why do you think that? Mark, did you sort out these issues with the Kenyan government? It's still ongoing. We have a case in court there, and yeah, my lawyers are working on it. LA Met says BSV is the best Bitcoin Satoshi vision. I didn't know you were active in that. Looks like I'm through the comments. Where does your conviction of Bitcoin Cash comes from? Well, Bitcoin Cash has great fundamentals. It's a decentralized project. It's Bitcoin done well. It scales. It also innovates. Thanks to scaling, it has cheap transactions. Will continue to have cheap transactions. Thanks to innovating, you can. The new tech is implemented, such as smart contracts. There is now a smart BCH, a smart contract platform on top of Bitcoin Cash. I believe they're also even busy with NFTs there. Haven't studied this yet, but that's what's needed. Bitcoin, the vision of Bitcoin is to be money for the to set people free, that they can receive money on their phone, that cannot be inflated away, that cannot be taken away by governments. You have privacy on Bitcoin Cash, though it's not as good as Monero, but you can create privacy by mixing the coins, and it's a balance. It's a balancing act always, cryptocurrencies. But I would say Bitcoin Cash versus Monero. The problem with Monero is the legal risks, and that's why not many exchanges quote Monero. You cannot find it as a currency on many exchanges, but also not with merchants easily because of the legal risks. That's not a problem for Bitcoin Cash. It's really very widely available. If you look at almost all cryptocurrency exchanges, all merchants, almost all offer it. And so it still has that potential to be seen as an alternative to BTC and even Ethereum, but especially BTC. Once people realize that actually this is actually not managed well, and they look for an alternative Bitcoin, or a Bitcoin that's managed well, that they end up with Bitcoin Cash, and so it's still possible that's thanks to being managed well. Managed well means it's not centralized by one person who can basically parasite on the project and thereby destroy its great properties. And that's what happened with Bitcoin BTC. Um, and that's guaranteed. Like the way it's run in Bitcoin Cash is we have different clients developed for it. And you just have a team of people that really understand that it needs to scale, that it needs to be innovate, and that's what's done there. What do you think of China stocks? Asks Erin Demir. They are down 70%. Well, I've changed my opinion on China in the past few years. I was actually bullish on emerging markets and China especially. But as I've studied things that have happened in China the past few years, they've really turned around from opening up their society to the world to closing it. And I don't think China can actually grow. I become the next superpower. There's a few things, a lot of things they do right, but a lot of things they do wrong also. And I don't think they will make it. They really need to change. They really need to change severely if they want to continue to grow. And I don't see that change happening right now. To the contrary, what they need is, wealth is a consequence of freedom. And they have freed up their society a lot in the 80s and 90s, and that has created a lot of wealth. But then you need to go back to the political side and create more freedom if you want to have that cycle to continue. And so the amount of freedom that Chinese have is quite limited. It's not that big compared to the amount of wealth that they have built. And so now there needs to come more freedom again. But that's not happening. The government doesn't want it. They want to keep their strong control over the people, and they are really clamping down hard on them, shutting down all cities again now. And it's bad. It's really bad for the country. So I'm not bullish on China, and I don't believe it's managed well anymore. It was managed very well in the 80s, 90s, early 2000s, but the past 10 years, no. Have you considered the possibility of nuclear war? Yes, of course, as we all have now with this war in Ukraine with Russia. And I believe that also has spooked the markets somewhat. It's fear. It scares you. But it's not probable to happen. Okay, I think I'm through the comments. Thank you, guys, for all your questions. um, I'm gonna end the call. I wish you all good luck in the markets. I hope you invest and invest strong, and find the courage to lay aside the fear, overcome the fear, and invest in the future, and invest and buy the things that and invest in the things that people will need in the future, that they don't realize that they need now, that they today do not realize that they will need in the future. um, and I also hope that you don't let yourself be influenced too much by the daily talk. Uh, Sell the news. Huh? What's in the news is not. You're not predicting the future. Huh? If you invest based on the news, huh? You have to invest based on what's not in the news, huh? What people don't see, because that's not priced in. Huh? Thanks so much for joining, and have a great time.